On today's episode of the Dr. Tom Show, I'm joined by Bill Owens, a partner at the CPA firm of Owens and Bondell, where they have more than 450 dental clients in the Southwest. Today's topics include overhead adjustments, embezzlement warning signs, and the delicate dance of DSO deals. Now, on with the show. Bill Owens, welcome to the Dr. Tom Show. I'm so glad you took the time to be a guest today. I really appreciate it. I want to start by talking a little bit about your background. You went to BYU for your undergraduate degree and then on to Arizona State University for another degree as well as an MBA, and then you worked for Accenture. Tell me a little bit about how that experience informed what you're doing today at Owens and Bondell.
Well, I spent 5 years with Accenture. My role there was to sit between the accountants and the computer programmers and help those two groups to communicate with each other. Here's what we need the systems to do. Here's what we can do. So it was a great experience. Worked with a lot of great people and was in New York and Oklahoma and Texas and here in Arizona.
Was your path ultimately to join the Owens and Bondell, the firm that your dad had started?
It was not.
Yeah.
It was not. I was pursuing that career and enjoyed a lot about that. But the firm, my dad's CPA firm that started with 13 doctors in Phoenix, it was growing and he needed help. He had Matt Bondell was working here and my brother Steve Owens was here. And then I joined. And my wife and I were excited to move back to Phoenix from different parts of the country. And so, went back to school, got another degree in accounting, and the adventure started.
That's fantastic. Now, from that baker's dozen of dental clients, you're, I think, well over 400 at this point. So in your tenure there, what is it that you guys have done to have such tremendous growth over time?
We currently work now with about 480 dental offices, mostly in the Southwest, a few in other parts of the country. Why did we grow is the question.
Yeah.
It's probably not just one thing, probably a few things. I think that one of the things that we do is a little different than other CPA firms is we meet with our clients at least 2 or 3 times a year and do check-in.
Yeah.
We'll bring to that meeting a compiled profit loss statement up to that point in the year. So that regular check-in rather than just end of the year. I think another thing that's helped us is we do a lot of market analysis. Just how are my numbers looking compared to other offices? I got back from a conference this week with the Academy of Dental CPAs. We've been part of that group for 24 years since its inception. And this is a group of 26 firms across the country. We have one in Canada that just joined us. And we had our conference this week in Nashville. And one of the speakers was a very successful dentist that owns multiple practices. And his take was, what I really value is how am I doing compared to other offices?
Yeah.
Advertising, wages, supplies, lab. Those are kind of the big ones. Rent is its own look thing. Yeah. But I think our ability to harvest those numbers, we go over those with our clients. We do a lot of tax planning. And I think another thing, Tom, is we charge a monthly retainer fee. A lot of CPA, maybe like attorneys, will charge you every time they call. Every time the client calls, boom, there's another $300. There's another $400. And so we've set up a program where you pay a monthly retainer. We do the bookkeeping. We provide services under that retainer. But the doctor doesn't have to hesitate. Should I call? Do I want to? Is it worth the fee? And so there's open exchange there of ideas and questions. And so those are a couple of things that come to mind.
Because you've had so many new clients come to you, obviously they were being served by somebody else. The thing that we always ask our patients about, and I'm sure you would ask new clients about, is why were they motivated to make a change? Did something go wrong that caused them to make a change?
Yeah. There's all sorts. My old CPA is retiring and I don't like the new guy.
Yeah.
We've heard about you, good things, and I'm ready for a change. Lack of communication is a big one.
Okay.
Didn't really talk to me. And then, of course, another big one is, boy, why did I get a call on April 10th that I owe $45,000 in taxes? I mean, that's kind of part of the
Yeah.
communication thing, the planning thing, but those are some of the main things we've heard.
I think there's tremendous value in a dentally focused, dentally experienced firm. And so do you find that there's gaps when you have new clients that come from, we'll call it a more traditional firm that just deals with all kinds of small businesses? Things that prior firm just wasn't keyed in on because they didn't have that level of familiarity?
I think so. I mean, I've got a new client I'm working with now, and she's been in practice for 20 years. And she's pretty, I mean, she really likes our method and how we approach it. Boy, I just didn't get that from my old CPA. But people stay with their CPAs for different reasons. They're, whether they have a great relationship with them. Some just like maybe the fees that they pay, and they're kind of fee driven that way,
Right.
or they like the service. But yes, all sorts of the new clients that have come to us have mentioned they appreciate kind of those main things I said before, the financial part of how we charge, the touch base, and then of course the tax planning. And that's all kind of under the umbrella of, we work with a lot of dentists, so we know we help a lot of dentists buy practices, help them with due diligence. And we have a very strong network within the dental community, whether it's lenders, consultants, people that help with insurance negotiation, marketing companies. I mean, all those kind of things. So we've done some of that legwork for a lot of our clients with that network that we have.
And you mentioned already the Academy of Dental CPAs, of which you're a member. And because you've just returned from the fall meeting, I wanted to capture some impressions that you've come home with in terms of lessons learned. I think one of the great things about an organization like that is you now magnify your experiences by talking to all these other firms that also specialize heavily in dental clients.
This meeting, we had some great discussion on leadership. We have found our group represents close to 11,000 dental practices throughout the country. So it is no small group, but the feedback we're getting is mostly related to staffing issues. And so there were two speakers that came in and talked about leadership. Now, we get kind of a double whammy because it helps us as business owners, because we all own our own firms. We know what it's like to hire, to fire,
Yep.
to manage a team. But we ultimately, our goal is to take that information back to the clients and say, we listen to these two consultants. Yes, you can call them and pay them to come and help you at your office. And someone might be ready to do that. And these are vetted resources to do that. What I'm going to do as well is get that information from the speaker. So the leadership, there's people work in different ways and tackle things differently. One of the conversations I had with another firm they're out of Kentucky actually, is we've hired a new person, younger, out of school, he's in his 20s. He wants to come in later and work later. And he also likes to keep his phone out on his desk and check in with his phone from time to time. My age, I'm looking at those two things. Well, that's not really how you approach an accounting CPA firm. I want you here at this time. I want you home. You're out of this time. You kind of come in before the partner gets here, leave after the partner gets here, and your phone is away. Well, this young man did tremendous during tax season this last year. Very bright, got everything done on time. He just has this different schedule. And so some of us old school people are trying to navigate some of the newer employees. I hope I'm saying that the right way.
For sure.
But yeah. So that's one of the things. And it's a therapy session too. I mean, we complain about a lot of stuff, talk about our woes. And we had a very interesting presentation on cybersecurity.
Okay.
This, of course, is a huge deal for CPA firms because of the amount of sensitive information that we have in our system, on our database, bank accounts, credit cards, Social Security numbers, birth dates. So that was great. And we had a guy works with the FBI come and talk to us about how to protect that data. And of course, he works with dental offices too.
Fantastic.
So that's a good thing. We talked about some tax strategies to save when you sell your practice. You'll hear things about donor advised funds or contributing to your retirement plan. But there's some other things out there that maybe are on the IRS's top 10 watch list that we need to navigate some of those things the right way and make sure we're on the same page with things like the tax credits that are out there. And we did a review of the new tax law too that passed this summer, which is kind of our standing joke was, hey, meet the new tax law. It's just like the old one.
One of the things you just mentioned there, the so-called top 10 red flags. So when you meet a new client, what are some things you look for that may be high priority corrections? Either things that they're not doing that they should be, or things that they are doing that they shouldn't be, that you want to get off on the right foot with them before you take on their case?
I think keeping business and personal separate. I think documentation of things like cars, children on payroll, cell phones, some of these things that are both business and personal, make sure you have a good documentation system for those.
Yeah.
And I think just keeping the lines of communication open. I mean, if they're doing X, Y, and Z and I don't know about it or they haven't talked about it and all of a sudden it happens, usually it's a sign that there's some other things that are happening that are affecting them. I've got a new client right now. She was trying to sell her practice and she had spent a number of years running so much personal stuff through her business, Tom, and writing it off. And so my client was looking to buy her practice. And as we look through all the financials on the tax return, I say, well, her overhead is really high. So she's putting her yard person or her hairdresser or her cousin Vinny or whoever is running through the business. So she couldn't sell it. So she took it off the market, called me the next week and said, hey, I want you to start helping me and we're going to clean this up so I can get everything ready to sell it down the road.
Nice.
So that's the idea of separating the personal and the business.
And what would you say are the numbers that every dentist should know about their own practice? I mean, are there a couple of things, overhead, I'm sure would be one of them, but what are the things you really want dentists to be focused on month to month?
So I'm going to divide that question into two systems. One is your dental software numbers,
right,
and then the other is your financial statement numbers. I think from a dental software report, you need to know new patients. That needs to be a regular check-in point, at least every week, maybe twice a month, how many new patients we have and where did they come from. I think you're keeping track of your production and your adjustments and your collections. Are you collecting what you're producing?
Yeah.
And that should equate to what your accounts receivable looks like. On the financial statement side, for a general dental practice, that average overhead is around 63%. Different for endo, different for pedo, different for ortho and oral surgery.
For sure.
But that number, 63, is best measured, I think, over a 3-month period.
Okay.
So expanding that window of measurement is good. But from a financial statement standpoint, I think you start with overhead. The cash flow statement is not the same as an overhead statement. It's not the same as an income statement. So overhead does not count things like associate fees because not everybody has an associate.
Right.
And it doesn't count loan payments because not everybody has a loan. So you kind of carve those out and say, what does it take basic to pay these bills? And then from a cash flow standpoint, you do have to figure in my associate fees, my loan payments, things like that.
And that's one of the things I love about your quarterly review is you put together all of the expenses and all of the revenue on a single page, percentages of expenses compared to revenue. But then also in a second column, all those same categories, and those represent the entire body of clients. So you have a true benchmarking of your peers, which I think is really valuable. What do you find are the most surprising lessons that your clients learned from that review?
I would say, I mean, a lot of the time there's not a
Yeah.
surprise. I will bring up, well, your hygiene wages are higher than the average, or look at all these temps that you brought in. And like, yeah, Bill, we know it's
Yeah.
been, we're working on that. Advertising costs, they kind of know about that. Probably to answer your question, probably supplies
Yeah.
is causes more supply. Oh, wow. I didn't realize we were that far ahead. I better talk to
Whoever's doing that.
whoever,
Yeah.
whoever's helping me with the supply. But most doctors have a pretty good feel for,
Where they're at.
where their weights,
Yeah.
their lab bills. Oh yeah, I use an expensive lab. That's what I'm going to use. I know that that's more than the average. Okay. Or I have a CEREC machine. My lab is lower than the average because I've
Yeah.
got that machine to help me. So most of them are pretty, and I think a lot of our clients hire us. We work together. We track more that type of doctor who wants to meet. And if they don't want to be bugged by me 2 or 3 times a year, they're probably not worried too much about that stuff. That's okay. Everybody's got a different sort of approach.
Better to pay attention to it though throughout the year. You avoid those end of the year surprises like you were talking about. Many dentists will talk about one of the main roles as an working with your accountant is to save money on taxes, or just where do you find the best and safest, let's call it, opportunities for tax efficiency? Again, maybe that's with an existing client, or like I said earlier, a new client comes in and you say, oh, geez, they're missing out on X or Y.
The most drastic example is endodontist I work with who makes very good money, quite a bit of money. And he said, I just haven't been able to get my retirement plan going for some reason. So we've got that going now and helped him get that set up. That's one of the biggest benefits of being self-employed is you really have a lot of control over that retirement plan, the best one for you to make it work for you. So the two big home runs for tax savings for dentists are, one, investing in the practice with equipment purchases, and number two, a retirement plan. And those could vary based on your cash position in your career, right? Maybe when you're starting out, you don't have the bigger money to put away, but let's help you put away at least something. So those two things are the home runs.
One of the ones people focus on a lot is the Section 179 deduction. And when you're talking that through with a client who wants to purchase something, how do you help them decide if it's a good move? In other words, I think sometimes people fall into the trap of they just want to buy something because they can get some deduction, but spending money to get a deduction isn't necessarily a benefit unless you're spending it on something that's worthwhile.
Yeah, the old Kramerica Seinfeld skit where he says, just write it off, Jerry.
Right.
Well, I still got to pay for it. Section 179, immediately depreciate any new asset that you place in service by the end of the year, whether you've paid it off or not. So you could still have a loan on that piece of equipment, but you've got it in the office, it's plugged in, it's ready to go by New Year's Eve. I would say, number one, do you need this? By need, is it going to help you increase production? Is it going to help you become more efficient with your current levels of production?
Yeah.
Number two, were you going to buy it anyway? Maybe down the road. By that, I mean January, February, March, early in the next year, hurry and get it the end of this year. Usually the sales reps have pretty good deals at the end of the year, and you can get a discount on some of these things. So if you know you're going to do it, and it could be worth the hustle to get it done by the end of the year. We did a study a few years ago on the CEREC machine. I'm going to lower my lab bill, but I'm going to have this new loan payment. The study found that if you bought a CEREC machine, started paying the loan plus the interest, and you kept your production levels the same, it was not really a savings.
Yeah.
But if you increased your production, even a small amount, it became a financial benefit.
Right.
You're going to spend a lot of money on a CBCT machine. I mean, that's typically we want to do it sooner rather than later. The idea is you get to keep the money in your pocket rather than the government does, and save on taxes. And of course, the other part of this is just overall tax planning. I mean, nobody's really buying big equipment as they're getting ready to sell their practice.
Right.
So timing a big equipment purchase to offset the sale is not really something that doctors want to do. I wouldn't advise that. But if for some reason you've got a big year, or you're buying a second practice, or you're selling part of your practice where that income is going to be up or down, we need to talk about, all right, when should I make that investment in that equipment purchase to lower my tax liability? Because the trick really with Section 179 is, or what I say is, nobody gets out of paying taxes.
Yep.
But the trick is to pay them at the lowest rate possible. And so we want to use that equipment purchase and kind of figure, all right, is this going to get me in that lowest tax bracket? Now,
You mentioned already retirement plans as one of the home runs, if you will. How do you guide clients into which flavor they should be in? I mean, you have the simple IRA, I guess, would be kind of the entry level, the 401k. And then you have defined benefit plans. And if I'm leaving something else out, let me know.
I mean, it depends, of course, a lot of things, but a lot of financial planners will start with the question, how much money do you want to have when you retire? What are you going to need to live on? And I think that's a valid question. And to do that, I like to add to that question, how much cash do you want to put away this year?
Yep.
That's great that you're looking down the road, but we're kind of living in the present right now. And if you say, I think I could put away about 15,000, then don't do any business plan. Just you and your spouse each put in $7,000 to a traditional IRA, and it'll be deductible. I think I want to put away around 40,000. All right, let's talk about moving up to the simple IRA.
Yeah.
I think I want to put away 60 to 70,000. Let's talk about the 401k, which costs money. The first two don't cost money.
Yeah.
They're free. But once you get into that 401k with the matching and the profit sharing, and then the defined benefit where you could put away a couple 100,000 or more per year, you pay fees to people to help you do that. And I think it's worth it.
For sure.
When you're in that position to put that much money away. Depends on your age, depends on cash flow. So I kind of like to start with how much money are you comfortable? And as the doctor grows in the practice and debt is paid off, I mean, we want to really look at things like debt and what do you need to invest in the practice? How much do you need to save for taxes? How much in your retirement plan? And if you want to go to Europe or you need to redo your kitchen.
Yeah.
Those are kind of the 5 main areas that we talk about. And of course, retirement plan and assets, those are both tax deductible.
Right.
So we kind of, the word is diversified. We want to make sure we're taking care of all 5 of those, but definitely the sooner we can get a retirement plan going through the business. And you got to look at your team too.
Yeah.
Attracting and keeping team member. Maybe there's a doctor listening who lost a team member because the practice down the road had a better retirement plan.
Benefits, I think, are critical.
In addition to maybe some other things. But the more the older doctor can create competitive pay, good benefits, and a great working environment. I mean, those are things that you control as a business owner. A lot of stuff you don't control a lot of stuff.
Yeah. I think that the typical overhead, 63%, I think was the number you said. I can cut expenses or I can increase revenues. So with those 2 levers, if I'm going to cut expenses, where do you find that dentists can be most effective? I mean, presumably everything I'm spending money on, I need. We know that labor is going to be my biggest chunk of overhead, but Where typically do dentists find savings on the expenses side of the equation?
Great question. And again, this is something that the doctor does have control over.
Yeah.
I would say supplies and lab are the two biggest areas. On average, you're looking at about 6.5% for each of those
Yeah.
in terms of your overall costs. You've got some control there. And whether it's shopping around cheaper supplies or a cheaper lab, sometimes that works, sometimes it doesn't, and it backfires. So you sit where you're at. Looking at a couple of years ago, our average is 63 now. A few years ago, pre-COVID, around COVID, that average was 61.
So if I want to improve my overhead by increasing revenue, have you found your clients are doing that through adding particular procedure categories or focusing more deeply on existing things like improving the hygiene department, or what strategies are you seeing there?
We should probably spend a whole other hour on this question. This is a great question. The last survey we did, we'll survey our clients from time to time, get a pretty good response. But the top, I'll call them the top ways that are attracting new patients are: number one, word of mouth.
Yeah.
Number two is insurance plans. Everybody wants to go fee for service, and it's great. And we are having more people do that, but it's got to line up to do that. Number three is location. And number four is social media. Social media is climbing up that list and could pass location pretty soon. But those, as reported by our clients, those are the top way. That's how they're seeing their new patients come in. Takes you back to my point earlier, is creating an office, creating the best office that you can, the patient experience.
And you mentioned insurance participation. That was one of my questions down the way here. There's always been discussion of dropping insurances. I mean, that's been around forever. I think of late, it's become maybe more frequently discussed because reimbursements have frozen. In some cases, they've been cut, and all of the other expenses of running a practice have gone up across the board. So are you finding in the years you've been doing this, are you seeing any movement on that trend in terms of practices you're dealing with being more likely to drop out of insurances, or are you finding the opposite, practices that had dropped insurance and their business dropped off enough that they went back in?
Of the few, I mean, it's still the minority.
Okay.
There's some that just have one plan.
Yep.
Basically, they're near a university or near a business, and that's the main insurance, so they keep that plan. That makes sense. But of the ones that have dropped or decreased, I don't know of any of them that have gone back.
Okay.
So I'll answer that question that way. They have found, so that's good. You know, they've made it work. Maybe production and collections have gone down a little bit, but they're more efficient.
Yeah.
They enjoy it more, and life is better. So that's part of that answer. But I still get from time to time, I mean, I'll get a handful of folks every year that think, hey, I'm thinking about doing this. I'm doing it.
Yeah.
And usually it's something happens and they get either mad enough or they see something on a podcast or they go to a CE and they go for it. I think there are some consultants out there that help with this. And I think my opinion is it's a little like they don't have a lot of control. Like if I'm a consultant, I'd rather help somebody in some more solid areas than this.
Yeah.
Because there's a lot of things that could go wrong or not produce the results.
It's a lot of risk.
There's a lot of risk there. And so let's look at A, B, and C first. Let's try to look at making your hygiene department more efficient. Let's work on your advertising. Let's work on your in-office communication plans. Let's look at, how the hygienist communicates with the doctor in terms of treatment planning.
Yeah.
Those are let's increase your fees overall. Let's make sure your fees are up to standard level with the industry. Those are kind of the safe areas where a consultant come out. This other area, because a lot of people want to do it, but they call and say, I'm scared. I don't really know what to do. I just stop it. And at the end of the day, that's kind of what it comes down to.
Are practices still having any luck with renegotiating fees? That was working for a while. I don't know if insurance companies have started to push back on that with PPO fees.
The last I heard on that is it's not as successful as it used to
Yeah.
be. Now it's more of a grouping, an umbrella thing. So if you've got Aetna and Guardian and Blue Cross and a few plans, you want to group those together under the plan that pays the highest reimbursement. So they're tied together.
Okay.
That has helped some people. I've had some clients that have done that. I mean, they've paid a fee of $5,000, $6,000, $7,000, and within a year they've got an extra $40,000, $50,000 in collections just by taking this approach.
Nice. Embezzlement is it's a very difficult topic, but it's something that a lot of dentists experience, unfortunately, as a small business of all types experience this. But in the world of dentistry, what are some things that you recommend to your clients as a litmus test?
I would say my approach to that with my clients, we do a couple of things. One is, am I collecting what I'm producing? And number two is, am I depositing in the bank what I'm collecting? Now, the first part involves, I think, to your point, a quick thing to do would be to go in and review all of your adjustments. You could take the last month if you wanted to. Adjustments should be 4 categories: insurance write-offs, broken down by company; bad debt, so this person's moved out of the state and they're never going to pay us. That's an adjustment off. Discounts, which I like to divide those into family and non-family.
Okay. So discounts for like your cousin, your brother, whatever. And then non-family would be what, my senior discount or something of that nature.
Yeah. I come in and I pay cash. So you give me a 5% discount because I'm paying cash. Or I've referred 5 people this year and I get a discount.
Okay.
And then the fourth category, which somehow doesn't show up in the reports, is embezzlement, but no one really enters that category. But reviewing those adjustments will be something you could do this weekend.
Yeah. And in terms of, I've done a little look like we were just talking about, what do you typically recommend for next steps? Is that something that a client would ask you to investigate? Would you recommend them to a firm that specializes in dental embezzlement to do the auditing and investigating?
It's a very nerve-wracking situation. Yeah. We had this last year with a client, and it started with my first comment. They were producing, but they weren't collecting the money. And after a couple of meetings, doctor, where's this money? Yeah. What does your accounts receivable look like? And he said, every time I talk to the gal, she tells me, oh, we're doing good. We're fine. Yeah. I said, well, you're not fine. Go look into that. So what they started to find was a lot of those collections were being rerouted to her own bank account, whether it was a check that she'd figured out how to endorse, and even some electronic EFT payments that got put over there. So our goal is, it happens at a lot of offices. Our goal is to just keep it minimal. And with the systems we have in place, we've got it covered where if something happens, we can spot it. Like we did with this other client, let the doctor know. Doctor has to act on it.
Team culture is really critical. And as you see so many different clients, you start to learn to be able to spot a successful office from maybe a less successful one. And I certainly believe that the team is a huge part of that. Are there certain elements that you find lead to those better teams, meaning long-standing employees, good productive office? Is it the benefits? You talked a little bit earlier about leadership. What are the ingredients you see or pick up on immediately with clients where you know, this office is being well run?
I love the question. And it's something that I've read a lot on this and studied this, because I would say, first of all, it starts at the top. Yep. It starts with the doctor. If you've got an attitude of it's okay for me to do this and not, you're going to have problems. if you've got an attitude of, I'm going to cheat a little bit here, then they're going to cheat a little bit there. So that honesty, integrity, and work ethic starts at the top. And not that everybody's perfect all the time with this. We all have hard days and hard weeks, but that's where it starts, number one. I think number two, there's a definite feeling of open communication. That enables an owner doctor to delegate. Some of my clients who are a little bit more hands-on, micromanagers, control freaks, whatever you want to call it. I mean, we're all like that a little bit, right?
Yeah.
But if that doctor can set up a system that he or she is comfortable with, where they can delegate important things to other people, let them do their job, and then touch base on a regular basis. We don't want the employee that always tells us everything's going great.
Yeah.
We want the person, hey, we have a problem here and we need to figure out kind of what we're doing, because we just, another patient just left and we just messed up on this system. And I mean, it happens in every office, and then I think the last thing as far as effective teams is regular reviews, official reviews on at least an annual basis with folks. They have to be paid competitively.
Yep.
But studies show over and over again, the number one motivator at work is not money. It's respect, autonomy, and involvement. And when you can create a team culture where you've got a group of people who are grateful to make a contribution to the team and feel appreciated by you, that's a huge thing. Sometimes we need to go make some more money for whatever reason. But if all things being equal, that's really the top factor. So starts at the top, good communication with the team, annual reviews with them. And then I would say those are the main things that I've seen. Every doctor is different, Tom. Everyone has different personalities. Some are quiet, some are loud, some really love mixing it up. Some just want to come in and put their head down and do it. But those are the main, you can still do those things depending on your personality type.
And I want to touch on DSOs, which I know is another hot topic. And this will probably touch a little bit on dental workforce as well. But the DSOs, obviously a component of the profession that is certainly here to stay. What are you seeing right now in terms of trends, both locally and speaking with your colleagues at the ADCPA? Are the deals getting better or worse? What sort of stories are you hearing about people's experiences? What are the things that they generally were happy that they did, and where are the regrets?
We did have a nationwide broker speak at our meeting this last week. So he shared a couple things. He said about 250 DSOs nationwide was one of the numbers he shared. So this is somebody, if you want to sell to a DSO, you hire them.
I'll walk you
and
through
they
it.
try to get the best deal for you. And the deals are, two thoughts on the deals. Several years ago, MB2 would offer you, say, 75% at closing, and the other 25% would be equity and come down the road. Now that number, one of the ones I saw recently, is 55%.
Wow.
EBITDA multipliers have come down as well. So they've also gotten a little more selective with the practices they're looking at. I think all these are good things, because if I were selling to a DSO and I just hounded them for the best deal possible for me, I want more cash up front. I want a higher multiplier. And I kept going and going. But I don't want them to give that deal to anybody else, right? Every other practice comes in, they get the bad deal. I just want the good deal, just because it's about me. Well, when you join the DSO, it's not about you anymore. You're part of the group. And so you have to kind of this is one of the comments from the ADCPA meeting that this guy was making is, just beware. If they're offering these tremendous deals to every person out there that they bring to the DSO, they're not going to be around very long. Yeah. We've had 10 practices or so in the last several years that have sold to DSOs. 5 of them have come back to us, meaning they've exited the DSO for various reasons. Yep. The 5 that have stayed, 3 are hanging on for their recap and waiting for the event to happen and doing okay. I mean, they're not super ready for a career, but they're okay. And then the other two are doing great. Now that's a small sample
Sure.
size. I get it. And there's still a lot of people that have sold the DSOs and are doing well. But overall, the market has slowed from a few years ago. The deals are not as great for the doctor up front.
Yeah.
But that's probably, I guess, the word that you would call it a market correction.
It'd be good news for private practice sales. I mean, you mentioned that you guys handle a lot of helping people either buy or sell their practice. Do you see we'll call it the net cash in pocket? Somebody's selling their practice and they have these two paths they can go down. They can sell it to another dentist or they can join one of these groups. Granted, the group comes with some other requirements in terms of sticking around and that sort of thing. But is there much of a difference in really what they come out with on the other end in the DSO path versus the private sale?
Depends on the deal, but
Yeah.
you sell you're in your, let's say you're 60 years old.
Yeah.
And you want to practice for 3 or 4, 5 more years and you sell to a DSO, that could be an okay path.
Okay.
Because you're going to make that initial sale, pay your tax, have, a bucket of cash that you can invest or keep, but your income is going to go down the next 3 or 4 years while you're practicing. But that's okay. You're kind of done anyway.
Right.
So it might have been similar if you had worked at the end and then sold it to a private practice. But you've now got the relationship with the DSO, which hopefully will recap and some more cash will come in down the road. You're part of the family now.
Yeah.
If you're in your 30s or 40s and you do this, really you're just hoping that you found the right partner.
Yeah.
What we have seen is a lot of those promises about helping people manage their practices. Those have not been fulfilled to the liking of a lot of doctors.
Yeah.
Some have and been okay, but that's really a lot of why doctors sell the DSO is they're tired of running a practice.
But they're also paying the DSO an additional fee to do all that operational stuff. So that's got to come out of somebody's pocket.
Yeah.
The other part, the way I would look at the math too, is you've got, this fictional dentist that has, say, $1 million practice and they're going to sell to a DSO or they're going to sell privately. With the DSO, they got to stick around for 3, 4, or 5 years. They're also at risk at losing that other piece. So if they got 60% up front, the other 40 is hanging in the balance of them completing the agreement. And if they don't, they're going to lose some or all of that money. Versus the other dentist just works for themselves for 4 more years and then sells. It seems like a cleaner option to me.
It's a lot cleaner. One story on that. I have a client a few years ago who sold to a DSO. The initial cash at closing was not quite maybe what he would have gotten if he had sold private, but close,
Okay.
maybe like a 1.3 million versus a 1.1 million.
Okay.
So a couple $100,000 difference. And I said to him, all right, this other equity that you've got in the DSO, are you okay if you never see a dime of that? And he said, yeah, I am okay,
Yeah.
actually. Because since that's happened, that DSO has, I'll just say, struggled. And he probably won't ever see any of that money again. He knew what he was getting into, and now he's got this group. Hopefully the DSO gets its act together. We know we could probably wrap this up and say, not everyone is created equal.
Right.
Be careful.
And the other item I had on the topic of transitions was the housekeeping you alluded to earlier. So when somebody is ready to sell their practice or begin to prepare for that, because this is not a decision you make in a weekend, what advice do you give them on really cleaning things up? And how early do you recommend they do that so that when they are ready to make that move, that they have a clean set of books to be evaluated by a buyer?
I'll flip that a little bit. When I'm helping clients buy or investigate a practice, this is what we look at.
Okay, good.
Kind of reverse. We're looking at consistency.
Okay.
So if you've got 2 down years, then 1 big year right before you put it on the market, that's a flag. We're looking at collections.
Yeah.
Can you collect money? We're looking at a team that's going to stick around and that's going to help. If your wife is the front desk and the hygienist is your sister-in-law and they're both leaving when you leave, that affects the goodwill.
Sure.
As far as overhead goes, we're looking at reasonable numbers there for overhead. We're looking at benefits that you offer, because if I come in with now a $800,000 loan and I've got a team that wants all the same big retirement plan and health insurance, and I can't really afford that right now, we've got to factor that into the discussion. I think mostly what we're looking at is somebody who's willing to help with the transition to a selling doctor. Not that you have to be there for a long time, at least a few months to take care of things. But anyway, that's kind of a quick checklist of some of the things that we're looking at. Are you consistent? Are you collecting what you're producing? Do you have systems and teams in place?
Right.
What we've found overall, Tom, is in any transition, all of those factors being good. I mean, a good, not A pluses, but reasonable. You will lose some people, but you will then come in and you will gain some people because of who you are and what you bring to the table. So that's important for the buying doctor to do that. But the selling doctor, I would say the biggest trap is just as they get closer to retirement, they just keep paying their people more and more money because they don't want to hire anybody new.
Yeah.
And it's easier to just give them a raise, and that new doctor inherits possibly a very high-priced team.
And what the real estate element, owning your space versus leasing, how much of a role does that play in the practice sale? Meaning, is it more or less attractive, one versus the other? Not talking about the actual cost of buying the real estate, but if you're buying a practice that's in an owned space versus a leased space, is that a big element or no?
I've seen it go both ways. If you find the right practice and you're leasing a space, I would not let that be a deal killer.
Yeah.
Other people, that's a deal killer to them. I have to buy my space and
They want to own
practice.
it. Yeah.
Yeah. So it just depends on the person. It's worked great both ways.
You've worked with dentists in all stages of their career, startups, mid-career, transitioning out. In conversations with them, what do you find is their biggest financial regret?
I would say spending too much money on things that don't matter.
Okay.
And a lot of that is outside of dentistry.
The practice, yeah.
But we're human beings, and sometimes we do spend money on things that we don't need for whatever reason.
Yeah.
We compare ourselves too much to other people. And I think a lot of clients, when they get together, I think some of them lie about what their production is or their collection is, or, want to look better than things are. I would probably say that financially, just keep the focus on the patient.
Yeah.
Keep it on what you control. I mean, at the end of the day, what do you control really?
Right.
You control two things. You control the checkbook, and you control the patient experience.
Yeah.
So if you do your best to create a great patient experience for that person, every single one, and that's hard, but you can do that. Number two, you control that checkbook and not get too crazy with everyone's going to spend on stuff they don't need and make mistakes. It happens.
How are you using AI in your work life, if at all?
Yeah, that's a good question. This is part of our conference too. We talked about that. I mean, I'm trying to keep a little catalog of AI tools for clients who use it. I mean, there's an X-ray software AI tool, and some people like it, some don't. So on the dentistry side, I'm trying to keep that little database in case everyone asks me, all right, what can I use AI for? On my side at my firm, we use it for generating letters to the IRS and to different states. It helps us write those letters quick. But generally, it's mostly used as a research tool. And I will plug something into ChatGPT about a tax code issue, and it will come back wrong sometimes.
Yeah.
So I use it as a kind of a supplementary thing, quick, but I end up actually going to the real stuff to compare it to that.
Yeah. Bill, thank you so much for your time today. I really appreciate it. I can't thank you enough for being on the show today.
Thank you, Tom. Much respect. And we'll be following the Dr. Tom podcast.
Thanks for listening. Do you have a comment or a question you'd like me to answer? Please reach out through my website, drtom.show. That's drtom.show. Until next time.